Hey all, welcome to ShareTreck. Today is the 23rd of March 2022 and I'm determined to keep this video very short. Yesterday was too long, I realized at the end of the recording. So as always, a very quick roundup of news and macroeconomic factors, then technical analysis of NASDAQ and VIX, and then after that technical analysis of genomic shares. So that's the structure of this video today, and let's get started. The first news item I have picked up, curated just two news items for today. The first news item is talking about the biomanufacturing bottleneck that threatens to blunt biotech's boom. So the gist of this article is basically that all the machinery and equipment needed in order to create the labs and all the facilities that are needed for trials for biotechs is facing a bottleneck. So that supply chain bottleneck is going to create a problem for the startup biotech companies in meeting their goals and timelines. And that in turn is going to cause many of them to have financial troubles because they are on limited budgets. So this is one of the reminders that the supply chain bottleneck is still there. The next article I have for you is litho machine maker could be major chip bottleneck until 2024. So there is this litho machine maker that creates lithography machines that are used for printing circuit boards. It's a Dutch-based ASML, and it's likely to become the industry's bottleneck because they have a severe backlog. They are not able to ramp up the capacity to meet the orders placed on them by Intel and others. So that's a big problem at this point of time for the integrated circuit and silicon chip industry. So this brings me back to the point that probably the inflation is underpinned by supply chain shortages. And if we are trying to raise interest rates, that probably is not the solution for this issue. The solution for this issue is to clean up the supply chain and facilitate the easy movement of goods so that the demand can be met by adequate supplies. Just raising the interest rate would be a problem. And also, if we were to look at the yield curves, the 10-year versus the 2-year, it's tending to be more and more flat. It's going towards zero, the difference between them. And that's not a good sign. That always comes ahead of a recession happening. So overall, it seems that this interest rate hike plan that the Fed has got probably is not the medicine for this disease, and the diagnosis itself is wrong. So I'm more inclined now to think about Cathie Wood's thesis that suddenly all these bottlenecks will get resolved at one point of time, and a whole lot of goods are going to come in. Some will be obsolete, some will be over capacity, and there won't be adequate demand, and then we're going to slump into a recession. So that's where my head is at today. I would like to know your comments. What do you think about this? So having said that, let's get started with the VXN and the NASDAQ. So let's get started by looking at US oil, which is up around $5 today. That's an increase of 4.58%, and it's almost as high as we were on 10th of March 2022 after dropping briefly. On 10th of March 2022, I think our high was 114.75, and right now we are at 113.71. We are just $1 away from the high. So if I look at the MACD, it's not looking encouraging because even though the MACD is bearish, it's moving towards the signal line in a bullish manner with an idea of crossing over the signal line into the bullish side. And if I look at the momentum, it's above average and pointed upwards. So there's plenty of room for RSI to be overbought. So overall, I think oil is very bullish today. And when oil becomes bullish, it has an impact on the VIX. So yesterday, VIX had dropped all the way down to 22.93, but today we are up to 24.01. That's an increase of 4.62%. And this is the live VIX that I'm using here, and this candle is for the 23rd of March 2023. So the candle for today is already as big as the candle of entire yesterday. So you can see the jump that has taken place in just a matter of minutes. So that's a matter of concern. And our next resistance is 24.28, and the 100-day exponential moving average, which is this white line, which currently sits at 24.37. So if we were to break those two today, then they get converted into a very strong support, and it's going to be difficult to come back down very quickly. If I look at the MACD out here, the MACD is bearish, but it's reducing the distance between the signal line. That's not what I'm looking forward to. And also the momentum, which is below average, and that's a good sign, but the momentum is pointing upward, so that's not looking good. So overall, those are the concerns that I have. And if I were to go into a one-day time frame and look at what is happening here, so we can see that our MACD is very bearish on the one-day time frame, and the momentum is absolutely pointed downwards. And just now you can see that it has turned sideways. So we can see some kind of turnaround in the momentum to start picking up, and that's going to reflect itself in the MACD and inch the MACD towards the signal line and make the volatility to go up. So right now we have spiked a volatility of 3.14%, and I suspect that today we are going to have higher volatility, and it's going to impact the NASDAQ, and we are going to see the NASDAQ coming down. So right now the candle that you see here is of the previous day. NASDAQ feed is delayed for me, so we cannot see today's feed on the NASDAQ here. However, I'm going to use QQQ, which is a proxy for NASDAQ, and it's a live feed out here. We are down minus 0.94% on the QQQ, which indicates that NASDAQ is dropping, and our momentum is below average, in way below civilization, as I call this zone, within which I prefer the momentum to be, that is a shaded zone. So we are way below that, so that's not good. And also our MACD is moved significantly away from the signal line. So when MACD moves so far away from the signal line, there's likely to be a bounce back, because many participants would believe that the bottom has come in. So there will be a bit of buying. So very soon I could see a little bit of a bump for QQQ, but we can't believe that the bump will last. So that's my read on the market at this point of time, and we'll see what happens. So you can see the gap of the drop. Yesterday we were at 356.79, and right now we are at 353.28. So the major drop has happened here, and this is a gap that will need to be filled. So my opinion is that because the MACD has gone down so much and the momentum has fallen so severely, we are going to see a bounce back which will fill up this gap, and then we'll start our downward movement again. So that is likely to be the trajectory for today's market. And if that didn't happen, then tomorrow we'll attempt to fill up the gap, because all gaps in the chart have to be filled up. And that has been a truism that has proved itself time and again. So either today we go up and then come down, or we continue going down today and come up tomorrow in order to fill up the gap and then go back down again. So that's what I'm having in mind. So with that said, let's go and look at our biotech shares. So we have the biotech shares here on the right panel. I have sorted them according to the ones that are have the maximum gains. So IMTX is at the very top. And what we have here is a long-term chart with every candle being for 1 day. And you can see that the 9-day exponential moving average is giving a support to the price, whereas the 20-day exponential moving average is a constraint at this point of time. And we are trying to break through that. The 20-day exponential moving average is sitting at $7.51. And right now our price is at $7.51. So that battle is going on right now. If we succeed to move up, then our 20-day exponential moving average will become our support, and then we can use that as a foundation to make further progress. Another good factor today is that we can see that our MACD line has gone above the minus 0.59 resistance. So that's a positive. Now we want to see our signal line also cross over, and then we will have some kind of a bullish bias for the lack of a better term. That would make us feel better. And if you look at the chart also out here, you can see that the last 2 days have been showing upward momentum, and that's good for us. So the momentum is also going towards average. So what I need it to do is to go above average, and then there will be a much more solid basis for a bullish price movement. So MACD is bullish, momentum is picking up, so it's looking good for IMTX today. However, we have seen the volatility charts out there, so that will also definitely have an impact. If the overall market goes down, our genomic shares will also be impacted along with it, and so will be the fortunes of IMTX, DNA, and the likes of them. So having said that, we also have the earnings which are due on 23rd of March. So they have already come in. There's a surprise of 1 cent, that is $2.63 in the earnings, whereas there is a negative surprise in revenue. The revenue has been below expectation by 3.70%. So let us see how the market reacts to this. So right now I think we have got a bearish hammer out here because the bulls are pushing, bears are pushing it down. So let us see where the battle goes. And we also have this resistance of the 20-day exponential moving average. Let us see what happens at the end of the day. The market sentiment is definitely going to weigh in on IMTX, and its ability to retain the gains is a bit dubious at this point of time. Let's look at DNA, which is up 0.63%. So it's the second consecutive day of gain, and it's converted the 9-day exponential moving average into a support at this point of time. 9-day exponential moving average sits at 3.16, which is the yellow line, whereas our price is now 3.20. So hopefully we continue making gains with a resistance at the 20-day exponential moving average sitting at 3.56. MACD is bullish. However, I'm unhappy with the momentum, which is flat and below average. This needs to improve. At least it needs to point up for us to get any sustained bullishness. That doesn't seem to be existing out there. So I'm afraid that the momentum is going to be pushed towards the signal line. I mean, the MACD is going to be pushed towards the signal line. That is something which is going to be bearish for the pricing. So the DNA gains are likely to be short-lived given the overall market sentiment. Unless the market sentiment picks up, we're going to see DNA close either flat or below 0. Pfizer is up 0.36%. That's around 20 cents gain. And our 9-day exponential moving average continues to provide a support, followed by 52.48, which is this horizontal support. Our MACD is bullish, but it's tending towards the signal line, and the momentum is above average. Though it's not totally flat, it's got a slight bias upwards. So I'm hoping that that would tide us through the day and help PFE close flat or slightly negative by the end of the market, assuming that the market sentiments do not pick up any further. We go to Vertex. Vertex is down minus 0.39%. We still have very strong support from the 9-day exponential moving average and the horizontal support, which is sitting at 248.18. So together they're going to provide a great support for Vertex. And our MACD is bullish, though it's moving towards the signal line. Momentum is above average, but it's pointed downwards. So I would assume that there's a bit of a cooling off based on the overall market sentiment. So Vertex may lose a few more points and maybe end up the day minus $1 or minus $1.25. But overall, it is still in a bullish phase. As we can see, that it's in an upward movement. So I'm not much worried about Vertex at this point of time. Novartis is down minus 0.63, and it's still getting support from the 20-day exponential moving average, even though the 9-day exponential moving average has become a resistance at this point of time. So we have the MACD, which is bullish, but it's tending towards the signal line. And our momentum is just trying to go below average. So both of these together doesn't look good for Novartis. So Novartis may lose more today unless the market sentiment changes. So Novartis may probably end up the day minus $1 or so, in my opinion. Bluebird is down minus 1.17%, and the 20-day exponential moving average is the next resistance for it. MACD is bullish. However, momentum is below average and pointing downwards, which is not a good sign. So Bluebird is likely to lose more today, maybe end up the day negative 10 cents or somewhere in that region. Regeneron is down minus 0.85, and as you can see, we have had a very, very strong run. So it is but expected that there will be some profit taking, and the profit taking continues. MACD is tending towards the signal line, but it is still bullish. Momentum is above average, but the RSI seems to be overbought and needs to come down. That's what is happening here. That's why we see weakness in the pricing. But overall, it seems to be bullish because all the exponential moving averages are in the right order. and we are coming in from a position of strength as far as the momentum is concerned. So just a bit of cooling off is needed for Regeneron to pick up its momentum again. Illumina is down minus 1.17%, and our 50-day exponential moving average is the next support. And the next resistance is very strong. It is a 100-day exponential moving average along with the horizontal resistance out here, which is at 362.49. MACD is bullish, but it's tending towards the signal line. And momentum is above average, but it's pointing downwards. So the momentum is what is concerning me. And with the overall market sentiment being slightly negative, we're going to see further losses in Illumina. And we might probably end up negative $4 by the end of the day. So when it comes to Editas, we had support that was at this, which is this green line out here, which was at 18.20. And that support has now become a resistance because we have fallen below that, and the price is currently at 18.02. So at the end of the day, I'm going to turn that line into a resistance line and color it red. Right now, we have support from the 9-day and the 20-day exponential moving averages. The MACD is bullish, but it's tending towards the signal line. Momentum is above average, but the only thing I don't like in this indicator is that it's pointed downwards in a trajectory that will take it below average. And that's not a good news, because that's going to encourage the move of the MACD towards the signal line. And that tends to make the prices fall. So it's not looking good for Editas today. And even if we were to break these sentiments and raise above, then our next resistance is going to be at 19.05, which is this green line, which is the 50-day exponential moving average. Next, we go on to Caribou Biosciences, which is down minus 2.99%, almost 3%. That's a 30-cent drop. And the support is from the 9 and 20-day exponential moving average. MACD is bullish and it's moving away from the signal line. That's a good sign. However, the momentum, which is just average, is pointing downwards. And given the overall market sentiment, that means that Caribou Biosciences will find it difficult to erase the negatives that it has accumulated so far, and probably might end the day at around minus 45 cents by the close of day. So that's my opinion with regard to Caribou Biosciences. Allogene is down minus 1.81%, and that takes it below the resistance, horizontal resistance, which sits at 9.93. Right now we are at 9.77, and our 9-day and 20-day exponential moving averages are giving us a support. MACD is very bullish and moving away from the signal line. However, that is likely to change because the momentum, which is above average, is still pointing downwards and aiming to cross over to below average. And that, along with it, will make the MACD to move towards the signal line and become bearish. So I do not see at this point of time, with the market sentiments the way they are and the momentum the way it is, for Allogene to break through the resistance of 9.93. So having said that, let's go on to ARCG, which is down minus 3.16%. We have very, very strong support at 44.39, along with the 9-day and the 20-day exponential moving averages, which are sitting at 44.35 and 44.55 respectively. Right now, ARCG is quoting at 45.03, and the MACD is bullish but moving towards the signal line, and momentum is above average, but just about crossing over to below average. So the fact that the momentum is moving downwards is what gives me concern. And I'm hoping that we will end the day just above 44.39, which is the horizontal support. PACB is down 4.37%, and our resistance at 10.37 is still intact. And our 9-day exponential moving average is also a resistance for us. MACD is bullish, but it's moving towards the signal line, and momentum is weak. So PACB is likely to lose more today, probably end up the day with minus 0.50 cents loss. Teladoc is down minus 3.01%. 9-day and 20-day exponential moving average both are providing its support. MACD is bullish, but again, momentum is pointing downwards. So there is going to be losses for Teladoc. Teladoc is going to close in the red today, probably somewhere between $2 and $2.50 negative. CRISPR is down minus 4.54%. We are still bullish, in my opinion, because our 9-day exponential moving average is providing support, along with the 50-day exponential moving average, and the 20-day exponential moving average is the next support after that. And we also have the bullish channel, which is this green support line, a diagonal green support line. And MACD is, however, bullish but tending towards the signal line. Momentum, which is above average, is pointing downwards with an aim to move to below average. So those two things together make me feel that this strong support is going to be breached, and we may convert that into resistance before end of the day. And CRISPR Therapeutics might probably end up minus $3 today by the close of business. Verve is down minus 5.21%. And the 9-day exponential moving average is our immediate resistance. MACD is bearish, and momentum is below average and pointing down. So I suppose Vertex will end the day with a minus $1.50 loss. Intelia is down 4.60%, and it has breached our horizontal support, which was with us for the longest time. The 9-day exponential moving average is still giving support, but the 20-day exponential moving average has become a resistance now, and that's the immediate resistance for us. Our MACD is bullish, but the momentum is down. It's below average and falling, and that's going to take the MACD down along with it. So Intelia is not looking good today. Maybe end the day at around $3.5 negative, $3.5 loss. Beam is down 5.80%. That's around $3.58 down. And we are still within our bearish channel, and we have not been able to move towards the upper bounds of the bearish channels, which is the diagonal red line. Our 9-day exponential moving average is now a resistance for us, and MACD is bearish and moving away from the signal line. Momentum is below average and falling, so Beam is not going to do well today. So to summarize, I've just finished my technical analysis for the day. For the next 3 or 4 hours, this is what the market is going to look like. It's looking bearish, and we are going to lose some value in the market. But that brings me back to the same point I started off with. Please do not lose sight of the fact that supply chain issues are still persisting. And because of supply chain issues, the supply is low. So even if the demand is not very high, the low supply is not going to be able to meet even the low demand. And that's why we have inflation. And our employment is strong, which shows that the economy is very strong and everybody is gearing up to beat the inflation. However, I think the interest rate hikes at this point of time in order to cool the inflation is probably the wrong medicine, and we are likely to head into a recession. So that's my feeling. And typically the markets have always rallied around April. So I'm still holding out hope that we'll have a rally in April. But somewhere around the 3rd week of April, I would like to take profits wherever I have them and sit in the sidelines, because in May, typically the market falls. And also the midterm elections are coming up, and so those things are going to have an impact on the market. So I would be aiming to trim my position somewhere around the 3rd week of April and lock in as much profits as I can and sit with cash on the sidelines to catch any further fall. That's my game plan. I would like you to let me know what you think of this video. Put a like there so that many can see this video. And also, if you are new to this channel, please subscribe so that you can have all things related to CRISPR in one place. Thanks and have a great day. Bye for now.